So that is going in a thumbnail. And remember, I also mentioned CMG. This bullish consolidation here, kind of sloppy reverse head and shoulders on the weekly, and it has a massive gap up. It's too big. I would love to this one have gapped up, 345 to 350 area. It's 388. So on the weekly chart, it's way the heck up here. But maybe it pulls up, pulls back, and sets up in the next couple days. So a bullish gap, but it's too excessive for me to do anything with it right now. Here I put all these earnings stocks right in here. United gapping down, 67 and change. It's a mess. I have no interest in that. SynF, a bank, I can't tell where it's trading. ED, can't tell where it's trading, but if it has a gap anywhere up here, 79 and above, well, I have a print. Well, it shows a print at 75. Wow, if that's 75, then see, I totally changed my bias. Even though there's support there, it would be gapping under this month of consolidation on the daily, and that would be a bearish watch. Intuit, gapping up here, 179, whatever. It's just gapping right in the middle of this total mess. Nothing to do. XEL, same. I like this. If it were to gap above this and go, look, we have a price void on the weekly. We have a buy setup right on this minor support breakout, bottoming tail. That is a tier 1 for me. I'm putting that in a little thumbnail. UPS, it's hard to tell what it's doing. It looked like it had a print there, but now a print down here, totally neutral. But this was one I said if we got a gap out of this base, then that would have been a tier 1. But it's a watch. It's a watch. It's just not, it looks like it's not a tier 1 right at the open. Yeah, BA is up. I saw that. Well, actually the gap's not as powerful as the broader market indices, but it had a run into the close. It gapped up and it's pulling back here. I mean, it's fine, but if you're in it, but I don't see any new trade right there. Time Warner gapping down, 95.40, but it's a mess. Oh, 95.40. Yeah, right here to the 50 MA. It's a bearish gap. It's bearish gap, but it's the support. I'll look at it after 30 minutes. This is a total mess. This was a mess. Gap up, pulled in. Now we're gapping up. Well, this was yesterday, of course. Yeah, I can't tell what it's doing right now, but it's a mess. PH, a mess, and there's not much volume. It looks like it's opening flat, but it's in a downtrend on the daily and weekly. NEM, our gold stocks, and that's selling off here. Looks like it, kind of went flat on the announcement, 39.92. It's getting deeper into this, but this whole breakout failed. Remember this pro gap breakout day? We were watching it. I wanted to sell put spread, but it was too spready and no juice. But now all this consolidation is now overhead resistance. MGM, daily's a mess, 33.13, very bearish gap. So it's gapping under here. But, it still has this prior area. And the weekly is just a consolidation of mess, but very bearish gap right now. LEA, a mess, nothing to do. KBR, I can't tell where it's gapping, and it's, it's on support. It's on support, but much resistance overhead. It's a mess. IP, I can't tell where it's trading, but if it can gap over this last week's high, This weekly has signs of bottoming, right? Wide range bar, bullish inside day, bottoming tail, took out the week's high, bottoming tail doji. So this could be a bull put spread candidate, 30-minute high. ITW gapped up, came in. It's in a downtrend. Nothing to do now. Hershey gapping down to 92. That's bearish. And the monthly and weekly still look lower. So Hershey, look at this, declining 20, 50, 200. Lower lows, lower highs, gapping down to this. That's that's a tier 1 bearish gap too. I'm gonna watch that. HP, can't tell where it's trading, but you know, bullish weekly. It's consolidating here at the prior high. FCAU, that's a foreign stock. I think that's why you have all these gaps. I don't like those gapping foreign stocks. I'm deleting it. Here's the Pizza Man. Was a bearish 1, 2, 3, but on support, gapping up to 246. So that is a bullish gap. That's a pro gap breakout with a shock pattern, shocking the people in this ugly red bar. And that's to all-time highs. That's bullish. I'm going to watch that for a put spread on a pullback. COP. Gapping up, but it's a mess and overbought. BC. Yeah, I'm going fast here just because we have so many. Nothing there, and I can't tell where it's trading. BWA. Looks like it's gapping up a little bit, but this is way too choppy. We have way better plays to focus on today. Baxter gapping up to 68, so that's a bullish gap breakout, but there's resistance here. So definitely not a tier 1 play, but if it can build a high range base, it could be a 30-minute high on day trade. AEP, I like this. Well, it's actually gapping down. Well, it's flat. It's based on this print, it's gapping down 4 cents is all. But the weekly, I have another bottom. Pullback on the monthly, even though it was a deep pullback, we got a 2-bar reversal on the monthly. This is a reverse heading shoulders. So this is a tier 1 trade if it can get through this 69.50 area. So let me set an alert at well, I'm going to set it at actually 69.35 because I want to know ahead of time so I can get ready. American Airlines, weak again, gapping down, 43.82. It's gapping under the low here. Still, it's just slop. It's bearish without a doubt, but no tier 1 play to me. ALXN, 114. That's a bullish pro gap. Look at that, 114. It's gapping over this. It's a pharmaceutical, so you got that risk, but you had a bottoming tail. It was still declining 20, but there's a shock there. It's gapping over this month consolidation with a price void. So that is worth watching. Wow, a lot of good watch lists here today. Mighty Mo, what are you doing? So climactic buy setup, volume, but it's kind of a steady sell-off. I prefer, more rapid rubber band type sell-offs. So we got a downtrend daily, weekly, and monthly. We now have lower lows, lower highs. So I like my BMY significantly better. It's still stabilized here, but look at this ugly wide range bar breakdown. And I was, okay, this, I can't tell what it's doing, Alley. But remember, I was also watching PM. So I still like PM better because it's farther from the 20 MA, but there's still no reversal yet. I've been watching this since this nasty earnings gap sell-off day. And yeah, BMY is superior for all the reasons we talked about already. So I'm definitely watching that one today. And you have the weekly is also a CBS on volume. The climactic buy setup daily, weekly, and we're now stabilizing. Let's continue. PCG, really, that's garbage. I'm just deleting it. ABBV, gapping up to 95. That's another tier 1 play. Look where it's gapping with a price void. I mean, there's a lot of great trades today. Watches. Xilinx, 6710. It's gapping into garbage. Remember, the semis have been lagging, so I have no interest in that. Oh, and we have Intel after the bell, gapping to 124. So it's gapping deep into this bar, Visa. But look at this major, major resistance right there. You know, you can set an alarm there because then it would be a breakout. But, you know, it would be it's a bullish gap, but it would be a pro gap if it were gapping over the high of this. So we'll watch it, but not tier 1. Qualcomm's up a little bit. And I told you I don't want to mess with him just because of in the middle of the buyout talk. 77 bucks, bullish gap, but halfway into this, that's PayPal. And it's a head and shoulders top on the weekly. Look at that. That's a head and shoulders with kind of two right heads. Left shoulder, head, right shoulder, lower low, second shoulder, LVS. Gapping up a little bit, but no price void. Have zero interest in that. All right, I gotta hurry up here. Greg's gonna come on in a minute. GG, another gold stock, no interest. eBay, gapping down to 39. Very bearish gap, but it's right to the 200. We'll see what that does. CTXS, garbage. SAM, beer company, gapping up, but kind of extended. Nice 2-bar reversal on the monthly. Look at that, with kind of a reverse head and shoulders. T, gapping down to 33.64, very bearish gap. Look at this downtrend. Look at those MAs, but not a tier 1. AFL, nothing. AMD, 1088, bullish. That's a bullish gap, 1088, but resistance is too close. CMG, we talked about. Ford, GM, garbage. Facebook, we looked at. Tal, gets gap into 3670 to resistance, no interest. LVS, resistance, no interest. CME, gapping down, but support. MU, gapping up 49, but in the middle of congestion. Remember, all these, just semis have been hurt. All right, I'm going to turn it over to Greg now. We have plenty to watch here. There's still a few more here, but, you know, Greg, take it away. Save is bearish. Love, bearish gap. Under, that's a very bearish gap. Look at all these, all these moving averages down. We're gapping, you know, way the heck down here.
Okay, I'm trying to figure out how to do this from two different computers. It's not easy getting this thing set up and trying to save myself some time making adjustments after we get done doing the morning update and then switching platforms. So anyway, I think I got it figured out. Can have up multiple pages on eSignal and makes one small, one big. Anyway, so markets, as you know, are up. So what do we have to be careful with here? Well, at the open, you can see that the futures are testing this prior high and they're stalled there right now. However, we do have a void all the way up through here. This is this minor resistance area. Major resistance is up here. And so the question becomes whether enough sellers show up here at this prior high. So this is the idea of we have a void. We have a reversal down here, which suggests the potential to at least test minor and potentially minor being subjective, and then going up to the major area, which looks like it's probably the top of the big red bar from a couple of days ago. However, one of the rules, or part of the method that we always have in mind is, well, does it have to get up there and fill the void? Well, we'd like it to if we're long, of course, but we have a concept that's called creating resistance, and that starts with creating a swing high, which happened here. You buy the pullback since you had the initial strong move. You can sell some here and then put your stop down below here or somewhere in between if you want, but there's really nothing in between. And then wait to see if you can get like a red bar ignored, maybe a bottoming tail, whatever. And then you continue to move up. This is where we've got some uncertainty whether we can get through the high. So that's what we'll have to see and how it unfolds. We've got the same thing in the NASDAQ futures, but they're up against that minor resistance area now. But that doesn't mean it can't get through, and this is part of management. So, here, if we were to say, okay, we bought here or we bought here, and we believe that it can continue to go up. Hey, there's positive earnings out there. Everything looks great. Bottoming tail on the daily. I'm going to sit through it, but I'm not going to give everything back. I'm going to put my stop under here, and I'm just going to wait to see what happens. Nothing wrong with that. Actually, a good plan. But right now, going to see here whether it can get through here, what happens, or whatever kind of jiggles happen here at the open. The Dow, same thing, showing relative weakness. Look at the distance between current prices and where minor resistance is. So the Dow is showing relative weakness, but it's got a bottoming tail bar, came down close to the 200 MA and turned. So we'll give that the benefit of the doubt to say it's going to bring up the rear. And oil, which has been strong, it's up on the day. It's going to come up into the prior highs here. Whether this on the daily turns out to be a consolidation or it's just continued move higher, there's nothing to the left there, immediate resistance, but we've got, above this area, I should say. Right now, we've got this resistance to deal with. And so we'll see if, they keep coming for oil here. It's been strong. Those stocks have been strong. So we'll see if it continues. Bonds showing a little bit of buying coming in after 1, 2, 3, 4, 5, 6, 7 days down, a little bit of stabilization here. So the market will like that. It's always been this concern about interest rates going up. And I covered that in a YouTube video and in the letter that we go back and look at history. Markets have gone up with interest rates higher than they are now. So these concerns that come in, I think they kind of serve as an excuse to take profits during certain times where things have gotten overheated. Whatever the reasons are, they are. But I know historically, interest rates being where they are today, in a different market made no difference whatsoever. Not until the yield curve inverted. And gold, just crap, right? That's the technical term in master traders' technical strategies. This is crap. and it's just going sideways here, whether it's building a base or, to launch from there, we shall see. And let's see if the 30-year, here's the 30-year did get up near to the prior high and join the others. The 10-year continued to push higher. So interest rates are going to pull back here a little bit. Dan covered pretty much all of the stocks out there that are moving. Twitter bouncing off of the lows there a little bit. And what else I have on the list here? Probably pretty much the same stuff. There's a lot of bottoming tail bars yesterday. So all of that suggesting that we've got a turning point here. And now, of course, Amazon could foil the day, or some earnings come out after the close, but that's in the future, and we'll see how it is. Right now, looks like things are set up pretty well to, continue to show strength. Snap up a little bit here. That was looking great here. We had a nice little trade, and we got out of it before this thing collapsed. And we'll see if that comes back. That's got earnings, I believe, next week. And Apple, always on the focus list, underperforming here, not really doing too much. And NVIDIA coming up, bringing up the rear here. So semiconductors, some profit taking in them, and not so sure whether they're going to come back to their glory or not. But I still do like Intel. While it's gotten sloppy, it shows relative strength within the sector. All right, guys, that's it. We got a few minutes before the open. Let me get readjusted here, bring up the TC2000 charts and fix up my E-signal. So give me a second.
Dan, let me look at that. I'm just updating a trade here in Halliburton, just to roll the calls if they expire in the money. That's all. But we've been in Halliburton since April 5, XLE, April 10. And then we had a ton of, swing and bull put credit spreads in the sector. Well, the oil ETFs that we trade are USO, which is crude itself, and that has contango drag, but we'll still trade it per the chart. And then XLE, XOP, OIH. Which ones do I like now? XLE, I don't. It's in a sideways consolidation after a big run. XOP, the same. OIH, the same. So the answer is none. I don't like any of them right now. So we're still long, but from a covered call standpoint at a fantastic cost basis. So that's totally different than, you know, looking for a new trade right now. We had Verizon VZ on our watch list today over the high, but it's getting drugged down with T. Costco, COST. We had it. You know, we were tempted to do it yesterday, and we just decided to wait for today, which is fine because it's opening flat. So this will be like a great, you know, entry over the high with stabilization in the market. So look at that pro gap, Domino's Pizza, DPZ. It's excessive for me right now, but the, you know, pre-market action is strong. My rule is I just don't trade in the first 5 minutes. Let things minimum set up for 5 minutes. I had Hershey. See, I had as a bearish watch because of that one print, but there wasn't enough volume. So now I'm taking Hershey off my list. HSY, no interest right now. Dunkin' Donuts, DNKN. A big old base with a shakeout at the April low, but you know, over yesterday's high, you can set an alarm. Look, I missed this one yesterday as a gap play. I mean, we looked at it, but look at ANTM. That is a reason why you need to just keep coming back to look at your gap plays, because it was whippy in the morning. And then I lost interest in it, but look how it closed. That's a good lesson right there, and why you need to set alarms. Intel up with some of the others, but they have earnings after the bell. BMY I'm watching. It has some pre-market resistance around the 5230 area, but it is trading over yesterday's high. Let me see if we can get any juice for a put spread. Yeah, they're too darn spready. The 51s that expire tomorrow, 10 cents by 38. That's just untradeable.
Lost you there, Dan.
Oh, Can you hear me?
Yeah, I hear you.
The 50s for next Friday, 8 days, 7 cents by 44. So it's just totally untradeable right now, the options. Look at ABBV, gapping to the high end of that consolidation. Weekly support on the rising 50. I'm going to watch I'm going to put this one now in the place of Hershey. Transport's selling off here. All right, this XEL, I'm just going to set an alarm for 45.90.
It's real whippy. Futures are real whippy here. Oil come in pretty hard too.
Look at this ABBV I'm watching. It's, you know, plowing relative strength. Let me see what we can get paid on that. Maybe a 10-minute high if the market's holding. It's spready again, but Jesus. Going out to next week. It's still too spready. We might have to wait 30 minutes on that. Unless, you know, you get a good setup to trade the stock. I've been watching SKX for a long time as a climactic. It is still not ready. Neither is PM. They will be ready someday when the selling is exhausted, but it's not right now.
Okay. Looks like we might. Well, we've got 4 minutes to go on this 5-minute bar, but maybe a 180, bullish 180. We'll see. Kind of still whipping back and forth here.
Looking at DPZ, you know, as put spread for next week, but these things are just untradeable. Yeah, Google's selling off here. Relative weakness in the FANG stocks. Facebook, right there at the 200, has a little topping tail now from its morning little pop from the open. I have an alarm on XEL. You know, it didn't break out yet, but that's a nice bar. That's why I want to get notified early to get ready. The spreads today. The 45 puts on XEL are 15 cents by 90. It's nuts. So we would, you know, have to just trade the stock if we like the pattern. But I would let it break out, and then we'll watch the pullback on a 5-minute chart.
As I like IBM above the high of the day, holding up here. There's 146.80. Down quite a bit on the daily, and yesterday's bottoming tail. So I actually like the way it's whipping around here. It's got to get itself turned around. Dow futures are just wailing back and forth here. 2-minute charts got tails all over the place. Got a bottoming tail on the 5-minute Qs and one on the spiders. And so they need to get through today's open and above those highs, which is the same on the spiders.
Because Dan, yeah, you definitely get volatility crush after earnings, but you still have to trade a compelling pattern or else you'll get run over by the directional loss in your face. So that's you would be, if you were talking about shorting a call spread as opposed to a put spread, then you're fighting a pro gap. So I would be very cautious until you got a short-term bearish setup. But I'm looking at the premiums because, yeah, I mean, they're juicy. The 175s that expire tomorrow is over $1, $1.04. So a 30-minute low, you're just making a bet. Your stop has to be the high that you are predicting it not taking out today's high by tomorrow close. If you get a bearish intraday setup now, that's the mentality of that trade. Or if you were bullish, you got to ask yourself, what strike price would I either want to own the stock and or, make a prediction that it's going to hold by tomorrow? And let's just hypothetically say the 165s or say the 165s are only 17 cents. I wouldn't take that bet. But if we go out to next week, wow, the 160s, but it's because it's far away. The 160s only have a delta of 0.06. And that's why you can only get 25 cents for them. I just had an alarm on AEP. Oh, AEP. Yeah, that was similar to that XEL I was watching. Let's see if AEP I can get paid anything. Well, it's just how tight it is. You could sell the 67.5 $5 put spread May 52 cents. Home Depot. Wow, yeah, there's your alarm. Good. Is Home Depot ready?
It's ready for a put spread. I don't think it's ready for a long.
Right. Let's look. So going out to next week. Yeah, it's just, I mean, there's no right answer. I mean, do you want to do the 175s, get 65 cents? If you want more cushion, the 172.5s for only 38 cents. Or do you go out all the way to the maze and try to go further out in time and strike price? If we went all the way to the maze, which are 22 days to expiration, yeah, there's juice there. We can go all the way down to the 170s. 170, 160 is 80 cents. That's not bad if you think you're just getting paid time decay as long as this 2-month bottoming holds.
Apple showing some strength here. It's up near some resistance. You look at the 2-minute, but it's doing better than most things here that are just whipping back and forth.
Yeah, David. Yeah, I was just in the process of checking that. So thanks. And that throws a wrinkle in it. Because otherwise, I was ready to hit that. I was going to hit what I just said, the May 170, 160 puts spread 81 cents. But now you have earnings to hold through. So you have two choices. If you like that setup, you either do it anyway, knowing you have gap risk, or you sell a put spread before earnings, but then we aren't going to get paid as much. So you say earnings May 15, so May 11 is before that.
Why is the thinking that you have to hold this through earnings?
Well, you don't, but then it's just more of a directional trade, Greg, because the premium from time decay is not going to evaporate as quick with a pending earnings announcement. And so that's the answer. So you would then be trading it not as much on a time decay trade, but as a breakout trade. So just like with our CVX that we bought it and we sold a put knowing that earnings were coming up, we still had a fantastic gain on that because the stock went up 6 straight days in our favor. So we were making a little money on time decay, but most of it was because of the directional move made those puts further out of the money.
So 19 days from now, if it was 15 days, wouldn't the majority of that time premium be gone?
No.
So
that's
where's the whole melting ice cube idea? If it's got 4 days left.
Well, of course they're going to be less than they are now. That's without a doubt. But the same proportion of the melting is not going to be the same with a pending news item. That's my point. So yeah, you'll get a little bit of it, but not as much as you think. Whereas if we just stay in the May 11, where there is no news, then you get, yes, you're melting out ice cube day by day, without a doubt. So that's why I'm looking at the May 11s right now.
Well, then it sounds like the May 11s are the way to go.
Right. I just want to see if we'll get paid for it. Correct. Because then we have to do, our other analysis. So the 172.5, 167.5. So the 172.5 is under yesterday's bottoming tail. It's only 44 cents right now for 15 days. So then that's our analysis right now. Is that worth a $5 spread. I typically kind of like my 10%, which is 50 cents. But in this case, you have to hold it 2 weeks instead of one. So it boils down to how confident are you in this pattern? And yeah, I'm not getting my 10%, but I can't get what I want on every single trade, of course. But is it still a valid reward to risk trade setup? That's the question. And if we're, 90, well, let me ask you, what percent confident are you that we're going to hold yesterday's low?
100%.
Well, that's not true. So
No, it is. It's 100% true right now. Tomorrow or an hour from now, that might change.
I'm just looking at the stop also. Well, I don't think we would want to own this if it took out yesterday's low.
Dan, every single put spread pattern that I look at, when I think about it holding, I'm 100% believe it's going to hold. And sometimes it doesn't work.
Well, I hear what you're saying, but I don't think that way because nothing's 100% in the stock market. I just view it in terms of probability of that's a high probability pattern. So it's worth the risk and then go into trade management mode. Okay. But there's many patterns where you hear me say every single day, I'm not as confident right now that it's going to hold.
So let me flip the question. What percentage of confidence do you have?
Okay, I'll answer it right now. And I don't have a formula. It's all just our technical analysis opinion. So my opinion would be, market can always be in a tizzy. You can always have news events, this and that and that and that. So my honest answer is, and I'm swagging it.
Of course.
88%, 87. It ain't 100. I don't have 100% in anything, or else I'd mortgage my house and plow it into the trade, which we know we don't do. All right. So
I mean, I hear what you're saying, and I'm being devil advocate here.
Okay, but let me.
Neither one of us know 100% that it'll hold, but we looking at this pattern, and our experience says that this is a good bottoming pattern.
Correct.
So there's always a level of uncertainty and unknown. And it's like, well, it looks good enough. Press the button and find out.
That is correct. And that's what I'm agreeing on. So, folks, I'm going to post it right now. The trade we've just been talking about, 45 cents, now 44 cents, because it's moving up. So the directional went against us a penny.
And guys, part of you, not part of all of you that are listening, Dan and I have been doing this for a lot of years. You maybe think that, oh, we know so much. We do know a lot. But the reason we have stops is because there is that level of uncertainty and unknown. And there's no way around that. So when I say I'm 100% sure that this thing won't break yesterday's low, I truly feel that way right now. Because this is a great pattern. It's a bottoming pattern. It's not an uptrend, which I acknowledge that lowers the odds a little bit. But the weekly's in an uptrend. It's bottomed on the weekly. The market's turning here. It seems like a great setup to me. And when the market did sell off, it came in, but it didn't break. It didn't break any support. And actually got a red bar ignored from 3 days ago. Market's coming on here. 2 minute of the YM contract. Well, it's 10 seconds to go. It's got like a shrinking green bar. It's got a bit of a topping tail now, but it looked great 10 seconds ago. It's really whippy still, very whippy. right, we still have to have a long bias here based on yesterday's bottoming tail. Five-minute bars, got about 10 seconds left to go in it. See if we get a green one. I'm going to buy IBM above the high of this 5-minute bar, which is below the low high of the day, but it'll be pushing through today's open and above a bottoming tail bar. Let's bring this up here. And the 5-minute is over here at the top. I'll have a stop below the low of the bottoming tail bar. It got filled at 66, and immediately it comes in. Big 2-minute bar on the Dow futures. Market's going to try and push through the high of the day here.
That ABBV going.
Wow. Bristol Myers is still a dog.
I know. I see it in my 15-minute chart exactly. What about your Costco over the high? Could be the put spread.
Yeah, absolutely.
What do you think of XEL, or do you think it's been lagging the sector? I mean, I know it's been lagging, but you get my point. Or is that utilities?
Could be. It's an XEL, you said.
Correct.
Yeah, it's a utility, electric utility. Spiders through the high of the day.
Oh, that put spread. I mean, you could even, let's see where we are on that. Wow, they're only 16 cents now. Yeah, we had a nice entry yesterday. So if we were to add on spiders to get any juice, you would either have to do a tighter strike for tomorrow or go out till Monday. Let's see what we could get paid for the 262s for tomorrow. $0.43, not too bad. But I'm already in one, so that would just be if you wanted to add and or if you missed the entry yesterday. All right, Costco, I'm looking. We could do a weekly here, meaning expires tomorrow.
Talking about Costco still?
Yeah, I'm looking at, posting a trade here. I mean, you could do naked 192.5 that expires tomorrow for 45 cents, or let's go out to next week, because then we have more time and a further strike to give us more cushion.
What strike was tomorrow?
192.5.
It's too tight for me.
Yeah. So I'm looking at now 190. $190, 182.5, 62 cents. But the entry is over the high. I'd rather just wait and have that extra confidence. It's kind of a pseudo 1, 2, 3 looking on the daily, but it has, you know, bigger, yeah.
IBM's through the high of the day. Dow's going in the right direction. It's stalling here a little bit, but let's see what it can do. And from the things that I'm watching, is things like, you know, they popped up, but it's so far it's not like people or traders are falling all over themselves to get in here. Well, that's okay. And sometimes things they explode and for 20 minutes and it's just over, which is fine with me too. Well, maybe spiders are going to set up like a 1, 2, 3 continuation. A little over 2 minutes to go in this 5-minute bar. We've got a so far an inside bar, inside a wide range breakout bar. Let's see there in that bottom chart. Pushed above the open and the high of the day. We want to see it stay there, which it is. Facebook's holding up. That big gap. We definitely got a 1, 2, 3 on IBM here. What's the Dow looking like? Looks good. Not like IBM is the strongest thing, but I picked it because the fact that it dropped down and that bottoming tail from yesterday, which you can see broke the low and came back up again. And the intraday time frame looks pretty good. It's dealing with this high right now, so
Yeah, you know, Facebook's another example of those who shorted, straddles and strangles, and you know, bear calls. The expected move was $7.90 that we looked at yesterday into the close, and they're getting run over. So, you know, people like to tout just their winning trades and selling options, and we don't. I mean, we tell you, if you want the risk based on this assumption, then have at it and good luck. But we just prefer, unless we make exceptions like that CVX. All right, yeah, let's see what else we got going here. Yeah, I was just looking to sell a put spread on XEL, but it's too darn spreading. Yeah, Patrick, I mentioned. How many days do you want to go out, Patrick? If you want to do the ones that expire tomorrow, I mentioned the 262s, or now you can even do 262.50. You can do it, you know, put spread there, you know, go down $5, or go out to Monday, but then you have the weekend risk. But yeah, it's just, you know, we're approaching that breakdown area on the spider, so it's not all in, you know, load the boat right here. Preferably, you know, it stalls here at resistance, even though momentum's definitely up right now, and then we consolidate at resistance through lunch, and then we buy an afternoon breakout. Yeah, so I mean, you on the 5-minute chart. It's up 1, 2, 3, 4 bars right now. So it's not a great time to put on a put spread. But let me look at the numbers here anyway. 262.50 is 37 cents right now. And if you do it $5 wide, then you would have to buy the 257.50, and that midpoint's 34 cents. So it's not bad. That's still $340 on the 10 lot. But I would just recommend that you watch a pullback and try to get a better price for that. But I like that. I might add doing those same numbers. So IWM lagging here. It's not taken out its closing intraday pivot from yesterday, which is the day's high. But yeah, 5-minute pullback, Patrick. That looks good. Yep, I think I'm going to do that too. Let me type it here. 262, 257. So we want a 5-minute buy setup. Nice IBM. Yes, it did, Dan. Yeah, I sent it by telegram, email, and in here. Hey, Greg, for next week, IBM 144, 140, so only $4 wide, 47 cents right here.
That is not a Home Depot bottom.
Yeah, no, tough. That's 1,000% agree. And I was just, well, Home Depot's longer, 15 days versus 8. But yeah, I totally agree that I wish there were only 3 days, not not 8. XLE going back, threatening their prior highs. Wow. So you all see how I, stopped us out of that LOW because we were, we had a good gain, but with Home Depot going, the market going, I did not want to turn that into a loser. So we're out at half at a profit and half break even. Or, yeah. Hold on. The yields are coming in after 7-day rally to resistance. Yeah, Greg, I was just going to go over my gap plays again. Do you want me to take control?
Go ahead.
All right, so 40 minutes into the day. Let's, just go through. And then if I don't like something here, I'm just going to delete it. So UAL, bottoming tail, prior low, ugly as can be, engulfing weekly, no interest. I'm just deleting it. Sin F, that was, a bearish pro gap down. Still looks weak, but, look at that top. Look at this topping tail at the high. Now you kind of have an M here, kind of an M here with that. It would be a head and shoulders if, it closed up here, but the stock is it broke its trend, but no interest. ED, we couldn't tell where this was gapping, but look at the bottoming tail, and then it took out, the highs here. That is not bad. Let me set an alarm and check a put spread.
Wow.
Kind of lagging. It's not breaking out, but look at the moving averages now. From a downtrend to now it's above the 20, the 50 flattening. So buy it, it's stabilized. So this would be a put spread candidate, not a directional at all. But I could go down, 75-ish. And there's not enough juice for the 75s. Well, 75's far away. Let me look 76. Or even 75.5. All right, this isn't bad. We could do the ED May 75.5/72. So that's $3.50 wide. It's 0.45 a share. So let's see the entry. You could, you know, market's a little extended. Could do it right here. But you're holding it for 22 days. Now I'll just leave that as an idea for now. I'll come back to it in the afternoon. Intuit, bullish gap, but remember this morning we said it was just gapping. It was gapping in the middle of this, and I remember saying I have no interest. But look, that's because the pre-market bars here didn't give me enough information. So here's another example of why we have to come back later in the day and reassess. So now this is a bullish gap, wide range. Look at that, no tail on the bottom. This was just met with buying right out of the gate. It's it's, you know, sloppy uptrend, but it's in an uptrend daily, weekly, monthly. That's a strong stock right there. ED earnings in 7 days. Oh, shoot. I don't know why I had it in my earnings list. Maybe I just pulled it off of, you know, I saw a gapping and threw it in here. All right. Well, thanks for catching that, Dan. I would have checked before I, you know, made it an official trade and posted it out. But Intuit, but see, that's why it's good to have a checklist. Go through your checklist, just like a pilot before he takes off. You should do the same thing on entering a trade. So the Intuit way down here, 175. Wow, that's juicy. Didn't I see? I got to check the Intuit earnings now. Maybe that was not a earnings trade today.
Ross Storage is bottoming out here. Earnings on the 24th. ROST.
All right, but yeah, let's come back to Intuit because I like it for a put spread. There's no earnings. Well, it's May 21, so we'd be okay. Well, no, that would be the May 23. We'll come back to it. Yep. Let's see, folks, another example. We would never trade this directionally, but it's showing signs of bottoming and poking its head out right now. Got a bullish monthly. It's kind of a big multi-month bottom here on the weekly. Let's see what we can get paid there. All right, they do not have weeklies, so we'd have to go out to May. $75s, 45 by 50. So 75, 67.5 is 42 cents, but you have to hold it 22 days. Not meeting my 10%, but it's kind of the discussion on the Home Depot. What's the likelihood of this holding this $75 strike in 23 days? It looks like, you know, a fantastic bet. So then the only question is, in terms of return on your capital and your trading plan of how long you want to be in trades, is it worth a $7.50 wide spread for 42 cents for 22 days? It doesn't meet my juicy component, but It's not bad at all. No need, one or more on credit. Out 26 days. What does that mean, Dan? No need, one or more credit? Yeah, no, exactly. So do I. So it's not, it's the setup's there, but it's just not juicy enough for me. So this Intuit though, earnings are the 23rd. So if we sold the May 18s, I mean, we could even do the 170s on this. But it's a judgment call. Here, watch. You could do the one. It's just your risk to reward profile. We could do a $10 wide, 175, which is right near the bottom of yesterday's tail, 175, 165. And I'm only buying the 165 to limit the risk if you have a catastrophic gap against you, and or less, well, both reasons. It's less capital requirement at the brokerage firm, or you can decide to sell the 175, 170s, the 170s, 165, 170, 160. So they're all just how much cushion do you want relative to the premium that you're receiving. That's all. And I love cushion. So let's look at the 170, 165 is 40 cents. It's a little spready. We could probably get 45 cents. So that's my 10% rule. And your 170 is way the heck down here. And my stop's going to be under here anyway. So I'm going to get out of this thing, other than a gap, which I can never control. But I'll watch this into the close. That looks great. Let's continue. The XEL I mentioned. I tried selling a put spread, but it was too spready. UPS, wow, that's going, that's finally popped. Remember I had this as a potential gapper, but it was actually gapping down this morning right here. And that would have been a beautiful gapping trade if it opened right above this. But so what? This is bullish too. Instead of gapping over the highs, it's happening with solid buying right out of the gate. Well, and negating the bear gap down. So I like this for a put spread. Let's check out the 108s. And this one's been lagging FedEx, just like Lowe's was lagging Home Depot. Yeah, this is juicy. Again, we're having to go out in time, but I'll watch this on a pullback. We could do the May 107, 100 is 56 right now. I'd like to get that, a little bit more, and, definitely make sure this doesn't retrace over 50%. But today's action on earnings looks great. I'll watch that into the close. Greg and I just don't like holding for 23 days. We like getting paid quick. And that's what our weekly options trader specializes in. All right, UNP, transport broke down, bottoming tail, but total mess. I'm deleting him. TWX, remember we said bearish gap, but it was still in the middle of mess. Deleting him. PX, neutral, inside day, deleting him. H, bearish downtrend. I mean, if you wanted to put something just in your short watch list under the low, it looks lower. You know, weekly in a downtrend, deep retracement here on support, but still looks lower. NEM, a mess. You're gone. MGM, bearish gap. Remember we said that one this morning? It was gapping right to support. And I didn't have a good picture of pre-market because the volume was light, but that one still looks lower. That's ugly. And there's no way I'm going to get any juice for a call spread on this. LEA, oversold, big range bound. Now, see, a pattern like this could be an iron condor. Look at this multi-month. I mean, it was tighter here, but it broke out and deeper retracement, so it's a wide. Let's see if we could do a 200, 180, maybe 177.5. And this is just a good example of a pattern for wide sideways consolidation that I would consider putting a iron condor on at once. Well, let's just see out of curiosity. Yeah, that BMY back to the low. Jeez. LEA. Oh, there's only $10 strike prices. Well, that might be okay. Let's see the 200. For a $10 wide iron condor, selling the 200s up here, the 200, 210s, and this one way down here, the 175s. Because see, we're closer. The stock's at 185 and change, right? So the 200s are $15 away. Whereas this one is only $10 away. So that's why we're getting paid so much more for the put side right now, because it has a higher delta. It's closer to the strike price. Wow, look at that UPS still ripping. Man, oh man, look at this. So I'm gonna watch LEA, or maybe if it has a bullish reversal, maybe just do this out of the money put spread. This out of the money put spread alone is $1. The 175 way down here, 175, 165 is $1. So that's my 10% rule. But you're holding 22 days. No, Dan, on that one, I'm always, well, yeah, May 18th. Yeah, May 18th is the May expiration. It's the monthlies are always third Friday of the month, and not all stocks have weeklies, of course. Wow, look at this buying. That's a big bullet. Look at, it's the biggest bullet. I'm surprised there's not volume here today, even though it's only been an hour into the day. That's shocking to me that we don't have a bigger volume bar. But this is the biggest bar since this breakout here last January. And well, it's bigger right now. Just eyeball it. This is a bigger bar than that one. And look at these moving averages. So I don't even need to go back in time. This is a great example of using moving averages as a guide. Look at this. We had a rising 20. We had a flat 50, a flat 20, and then it curled up on this breakout. I actually had, I would give my advanced trading lab students quizzes all the time. And this was one of the quizzes. I would pull up various symbols and I would say, remove the candlesticks, just leave these 3 moving averages. And I would have them just talk their way through what's happening in the underlying just by looking at MAs. And if anybody said, oh, when the 20 crosses the 50, then I'm going to sell it, then I would kick them out of the class. I'd say, absolutely not. You don't follow that nonsense crossover stuff. But so I just gave you an example there. Let's say continuing with this, and then I would say downtrend, 20, 50. Now 20 MA is flattened. It's flattened with a declining 50. So I would say that's a consolidation and a downtrend, right? And then it continued its move lower. Then it flattened, started to rise in the 50 flattening right there because of what I just talked about. This convergence just ended up to be a buy point. Not this one, because it's way late. This distance between the 20 and 50 is telling me that this is way late. But look how they're converging over time here. Momentum was converging. And could this have been another downturn? Absolutely, it could have. But the 20 turned up. It didn't turn down at my flat 50. So I hope that little discussion helped. I thought it was interesting. We're just sandwiched here. Support and resistance, he's gone. IP, you're gone. ITW, you're gone. Hershey, we were watching him for weakness, but then when I saw the strength this morning, it's, big old doji bar right now, but no interest. We have plenty of other good ones. HP. Conflicting signals. I got a bearish engulfing, but I have a 2-bar pullback and then it's wide range igniting. Not quality. The pizza I was watching is a pro gap. That worked out nice. I was looking to sell a put spread, but it was too darn spready. Cop. Kind of a bull flag right here. Monthly and weekly look higher. That could be a put spread candidate when the oil sector consolidates a little bit more because they are still extended. BC, nothing. That's a mess. Baxter, pro gap breakout, but remember the morning I said it's a pro gap. It's gapping over last week's high, but it didn't have a nice price void. So, it worked. It's bullish, but no interest. AEP, that's on our radar. Let's look for a put spread now. I know that XLE was too spreading. No, wait, Pat. No, Pat, we do not. We're not moving average crossover experts. Greg's the expert at moving averages, and maybe, he can add to what I said if he wants to. But no. We don't take signals off that. We use moving averages as a reference point to speed up the analysis, to see if they're in alignment with support and resistance. But I was just, showing you how those 2 examples did coincidentally line up with candlestick patterns, to both of those being excellent buy points. Because under the hood, I'm appreciating what the messages of those moving averages are telling me. AEP.
Pat, then what to take note of is those moving averages are just part of the picture of the chart you're looking at. So narrowing just communicates to you that volatility is contracting and something is probably close to happening. We do not have to wait for a crossover. And anyway, once they're crossed, because depending on the time frame you're looking at, so one of the things, I don't look for the cross per se, but if I'm going to go long something intraday, that type of a trade, on my 5-minute chart, I want the 20 to be above the 60 and pointing up, and vice versa for shorts, unless it's climactic. So the cross in of itself doesn't say it's a moment to act. They're already going to have been crossed by the time I'm going to act anyway on the 5-minute time frame. That's relative to the time frame you're looking at.
All right, so over the high, I like this for a put spread. It'll be 67.5 is way under. Well, let's drill it here on the 15. So look, 67.5 is under all of this consolidation. So if it can take out the day's high, it's only $2.50 wide. So we are taking in 40 cents with a max loss of $2.10. I'll do the return on capital for you. 0.4 divided by 2.1 is 19% return on capital if it expires worthless. And stop under the base. So it's just another trade. I got the bullish monthly 2-bar reversal breaking out on the week. Well, it hasn't broken out yet, but look at these lows here. So again, Greg, says, hey, I don't draw sideways trend lines, look to the left. But what a trend line would show here is what? If I put a trend line right here, it's telling me I have higher lows on the daily by definition. So that means that demand is growing because the pullbacks are shallower. But I still have this tail here, so I'm not going to do this until over the high, which preferably will be after lunch. Let me just go through a few more of these since, I don't think that's going to, well, the market's still strong. Wow. Well, I'll still go through a few more and then I'll post that to our subscribers. All right, that's a mess. American Airlines, they aren't doing something right. This ALXM we talked about was gap into resistance, but now it's a range expansion bar with a bottoming tail breakout. So that looks higher to me. But it's pharmaceutical, so I don't trade those. Philip Morris, a dog, that's what's keeping the other one down. Alley, a mess. Look at those tails whipping all over the place. You're gone. ABBV, I like. I mentioned that. So gap up. It was to resistance, but deep into it. Go to my intradays, and buying came right out of the gate. I wouldn't call this a bullish weekly because, it's just stabilized now on the rising 50. So I would only do this short term, like for next week, if I could get it on 90. So let me look. Yeah, they do have weeklies. Good. The 90s are only 32 cents. Not enough juice for me. And I'm not crazy about trading the equity on that. We can find better. So you are gone. Visa, nice. Bottoming tail, breakout. Weekly, very sloppy. This very sloppy, but just like I do with Home Depot lows, et cetera, Visa and MasterCard go together, and that's also in a sideways mess. You are gone. Qualcomm, I told you I don't trade him, but sold off, rallied back to the high. If it could go sideways all through lunch, that could be a late day breakout trade, but I'm not interested. PayPal, range bound, mess. But because of the bullish gap, you know, it's big sideways here weekly. That could be an iron condor, sell out of the money call spread, out of the money put spread. Because look, support, 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 and a gap up over this bar. But I don't think it's going to go very far. So let me look at the numbers. Because it had earnings, so it's still involved contraction. So if I sold the 81s, so I'm going out to next week. Wow, 81s are only 17 cents. The 829, so the put side is bigger. But I'll hold off on that. eBay, that looks weak. That could be, I mean, this, I'm going to keep this as a watch. Oh, earnings tomorrow on PayPal? Okay, well, that's fine. What I was going to say was, on PayPal. Okay, well, yeah, thank you for that. Yeah, I just deleted him. This is a great late day breakdown trade. Do you want to tell me why, anyone? Yeah, no, Dan. Yeah, we love team playing here. Okay, now I know it's 4 red bars. I get that, but is it a climactic buy setup? Heck, no. It's a bearish gap under support, hanging onto the 200 by a thread. Small tail means it could not retrace. So this poor little guy got whacked, and his legs are broken, and he can't run. And look at this consolidation. We had a wide range bar, 1, 2, 3, 4 consolidations, and 50% of that. If this goes sideways, and relative weakness to the broader markets, of course, if this goes sideways for another 3 hours and takes out the low, you just short the low. It's relative weakness with we'll pick a stop over a pivot. So that looks great for a late day breakdown. Sam here had a pro gap, 50% pullback right now. I like the breakout on the monthly. This would be a bull put credit spread if it closed at this level or higher. I don't like the big topping tail, but let's see what we can get paid on Samuel. You would have to go out. You would have to go out to May. It's kind of spready. Yeah, it's very spready. Shoot. That kills that idea. It's too spready for me. T, we said, was a very bearish gap. That could have been a 30-minute low play. It's approaching this prior low on the weekly. But look at that. That's a pro gap. Declining 20, 50, 200. That's weird. I mean, is this, I think it's still a Dow 30 stock, right? Did he get kicked out of the Dow? I don't even know. Is he in the Dow? AT&T? Or did Verizon boot him? Whatever, it doesn't matter. But my point is, wow, a big industrial company that's in the telephone business, they are not doing something right. Similar, American Airlines in the airplane business. Verizon here is doing much better. Pro gap, 2 inside days. That's still a watch, but T is gone. AFL, a mess. Had a big breakout, topping tail, got slammed right back down. Nothing to do there. AMD, pro gap. Now the monthlies was toppy. I've been watching this for a long time, but now the bearishness is negated. This low was bought. Now we have a higher lows because of this pro gap. I'm not interested in trading it, but the bulls definitely stepped up. Let's see, CMG. Wow, look at that beast. Jesus. Now this morning I said the gap was too big for my liking. So where could you have got on board this? And this is a 15-minute chart. So you could drill down to a 5, of course. But even I try to be honest and not be a Monday morning quarterback. Could you have bought a 15-minute high? Yes. But would I have? No. I mean, I just know myself, and I'd say it's too extended. I want to pull back. So, but bullish pre-market, bullish action right out of the gate. Price void on the weekly. It looks like it's,